Hello everybody, good evening. Welcome to Officers Adda 247. I hope that you all are preparing well for your JAIIB May 2025 exam because time is running out. We have effectively only 40 days left with us if we leave aside the revision time and practicing mock time. Otherwise, we can crack this exam in the limited time period also. But one thing which you must have in your mind always, right from today itself, that you can crack this exam. That reaffirmation is very, very important because time is running out, as I told you earlier. Now is the time where the bankers, the students will have second thoughts that whether we should appear in this particular cycle or we should jump on to the September-October cycle. My advice would be start studying if you have not started yet, because this is the opportunity, this is the opportune time wherein you can peak your preparation level. Okay, so let's move on to today's video's agenda, that is RAFTAAR Series IE IFS MCQs. We will be solving some quality MCQs pertaining to your chapter related to foreign trade policy, foreign direct investment, foreign institutional investment, and various types of FDIs. So let's get started. So the first question says dash mostly depends upon the arbitrage and hedging variations across different parts of the world. So the process of hedging and arbitrage is reflected in which of the following setups, whether it is foreign direct investment, process of globalization, foreign institutional investment, or trade protectionist measures. Quickly try to solve the question. It should hardly take you 5 to 10 seconds, because now I hope that everybody knows 0.5 marker means this much time only. Okay, and the expectation from my side would be that all of you who are watching it live or recorded format, you must leave your scores. And what is the final score? You must tell me in the chat section or the comment section. So the correct answer to this question will be foreign institutional investment. Now, when we talk about globalization, globalization in turn led to your foreign investment. And foreign investments are subcategorized into two parts, that is foreign direct investment and foreign portfolio investment. And under this FPI, you can see the term foreign institutional investment. So in a way, all the three options, be it foreign direct investment, process of globalization, or FIIs, all the three will redirect towards your what? Arbitrage and hedging. But specifically where this process is involved in your FIIs, that you must remember. Okay, so you must select the most appropriate answer from the options given in the question. Option C will be the right answer. What is arbitrage? See, buying in the lower price market, selling in the market where the prices are really high, like what is happening in USA right now. That particular thing is known as arbitrage. Hedging, protecting the funds using derivatives when the market forecast is towards loss. So hedge is what? Supposingly this is your security, right? This is your security. This is the security instrument which you are holding. Hedging is what? It is a kind of protection, right? If the losses are moving towards your security instrument, hedging, the process of hedging will try to involve certain derivatives so that this particular loss is minimum or there is no loss at all. Fine. So arbitrage and hedging is a characteristic of foreign institutional investment. Okay, what about defense manufacturing? Under the defense manufacturing, which of the following activity is permitted for 74% through automatic route? Now, you must be knowing that there are two types of routes in the FDI. One is your automatic route. Second one is what? Your government route. Automatic route means what? There is no involvement of government of India. But government route means direct involvement of government of India. Okay. So defense manufacturing, which of the following activity is permitted for 74% through automatic route, whether it is industrial license, modern technology, missile manufacturing, yeah, none of the above. When we talk about defense manufacturing, particularly defense manufacturing, there are two components. In the book, you will see that 100% is written in the FDI cap, but it is divided into two components. One, certain areas are there where automatic route is allowed, and some areas where government route is allowed. So automatic route is allowed in the defense manufacturing for what? For DIL, defense industrial licensing, that is for 74%. When we talk about government route, then 100% is allowed, 100% FDI is allowed, but for your modern technology. So that is the bifurcation, especially in the defense manufacturing. And this bifurcation you must know, you must remember, because question might be asked directly from the defense manufacturing. For this particular question, what will be the right answer? Option A. Okay, option A is the right answer. Here it is written also, 100% is the cap, but 74% through automatic route for new defense industrial license, DIL, and up to 100% government route in the access to modern technology. Okay, so do let me know what is your answer. Fine, all those who are watching it live, you must tell me your answer in the chat section. Which of the following sectors are prohibited for any investment under FDI? You have to name that particular sector where no investment can be there under FDI. No investment. Okay. Whether it's development of townships, telecom service, Nidhi funds, or print media. Quickly tell me. It is what? It is Nidhi funds. All those prohibited sectors we will be studying, but for this particular question, answer is option C. Fine. So when we talk about FDI prohibited sectors, these are the sectors wherein FDI is totally prohibited. It is banned in a sense. What are those areas? Lottery business, which includes government as well as private lottery, online lotteries, and online gambling, online betting, as well as casinos. They are also prohibited. Then we have chit funds and Nidhi company. Now, what is a Nidhi company? Let's see. Nidhi company is nothing but, first of all, it is NBFC, non-banking financial company, that can only lend money or accept the deposit. That is the sole function of the Nidhi company. That influx of money to the borrowers and influx of money again to the companies or the NBFCs. In NBFCs, and here you can say it is borrowers. Fine. So this is the setup under which Nidhi company functions. Then we have chit fund, which is also a committee like Nidhi company, but only accepts the payment made in installments over a set period of time by its members. So in short, you can say that chit fund is nothing but a type of committee wherein various members are there, and they make the payments. They will make payment when they have accepted certain payment. Now when they repay that payment, they pay in installments, fine, over a fixed period of time. Basic difference you must know. Nobody will ask you in the exam what is Nidhi fund, Nidhi company, chit fund, but again you must know because we are studying right now, na? Then TDRs. What is TDRs? Trading in TDR is also prohibited. Transferable development rights. It is just a zoning technique that allows property owners to transfer the development rights of their land to another location. Like what? Like the you can say one real estate company is there which is planning to establish you can say apartments, construct apartments in your area. Now certain rules, regulations have changed over a period of time, and now that particular company no longer is interested in the development of the real estate in your area. Can it transfer the development rights to other company? Answer is yes. And how it will do that? Through the TDRs, transferable development rights. Okay, so these are the prohibited sectors. With reference to the concept of economic growth and development, you have to select the correct statements. Economic development comes before economic growth, so it is wrong. Why it is wrong? Because first of all, you must have growth in the economy, then only development is possible. Statement B says that economic growth brings both quantitative and qualitative changes in the economy. So economic growth is all about quantitative change only, qualitative is not there. Then economic development is the subset of economic growth. It is the reverse order, where we can say that economic growth is what? It is a narrower concept. So it will be what? It will be the subset for your economic development. Okay, under economic development, you can say economic growth falls. Last statement says economic growth means the increase in production. So increase in production happens when you have growth in the economy. Normally in newspapers also you must have read that the growth of Indian economy is this %, the employment growth rate is this much. All these numbers, all these quantitative data will be provided under what? Under economic growth concept. Fine, so option D will be the right answer here. All that which we have discussed, it is written here as well. Okay, one important point which you must know: economic growth is more relevant for assessing the progress of developed countries, whereas when we talk about development, economic development, it is more relevant for the developing countries like ours, that is India, and for the developing countries. Okay, what about the SCOMET policy? SCOMET policy forms an integral part of the Foreign Trade Policy 2023. What does O stands for in SCOMET policy? Is it organization, outward remittance, ombudsman, or organisms? Correct answer is your organisms. Fine. And what about the SCMET? Fine, that we must also know. Correct answer is option D. We must know about the rest also. Special chemical stands for S. Okay, special for S, and C for chemicals. Then O for organisms, M for materials, E for equipments, and T is for technologies. So that in turn will tell us the full form of SCOMET policy. Okay, here it is written that the emerging areas like your e-commerce, developing districts, and streamlining the SCOMET policy. That is one of the key approach, or you can say pillar of the FTP 2023. Okay, next let's move on to 0.5 marker question again. Under the FTP 2023, the government aims to increase India's overall exports to what? What is the aim of government of India? Whether it is $2 trillion or $1 trillion. First of all, you must be very clear that what is the amount which our government is targeting, whether it is 1 or it is 2 trillion. Okay, then you must be very, very clear about the year, whether it is 2030 or 35. So it is what right now? USD 2 trillion by 2030. That is option C will be the right answer. Okay, here you can see the exports which we target for 2030. It is USD 2 trillion, a very big shot I would say, because right now we are sitting at $776.68 billion only. So is it achievable? Yes, we have time, still we have time, but can we achieve it by 2030? That we have to see. Now, what about the types of FDI? Here the question asks you or tests your knowledge regarding the types of FDI. A parent corporation establishes a subsidiary in the destination country. So what will be the keyword? Subsidiary. If you have read the concept of types of FDI, then just by seeing this particular word, you can answer this question. It builds operations from scratch. Hyundai India, Pepsi India are the examples of such FDIs. Which of the following type FDI we are talking about? Whether it is greenfield, brownfield, joint venture, or none of the above. Okay, so what will be the right answer here? 0.5 marker. The question is of 0.5 marks. When we talk about brownfield FDI, okay, it involves stocks. Okay, so Indian companies' stocks will be taken up, or you can say bought by the MNC or the foreign company. So it involves what? Stocks. Joint venture, when you will say that a particular type of foreign direct investment involves joint venture, when the profit sharing is happening, fine, you are sharing certain profit, and a system of tie-up is there, an arrangement is there where tie-up is happening between the foreign company and the Indian company. What is the example of brownfield FDI? It will be the Ranbaxy India, right? Ranbaxy India and your Jiangxi Sayo, right? This company took over the stocks of Ranbaxy India, and this type of setup is known as brownfield FDI. Joint venture, your profit sharing is there, a setup of an arrangement of tie-ups is there. Then you can say the example will be Hero Honda, wherein Hero is the company in India only, Honda being the Japanese company. Fine. This type of setup will be known as your what? Joint venture. When we talk about greenfield FDI, then the MNC, the multinational company which is investing in our country, it will form a subsidiary. Right? That is why I just told you that if you know about this concept of greenfield FDI, just by looking at this word, you would have easily marked the correct answer as option A. So correct answer will be option A here. Okay, the examples are in front of you. Daiichi Sankyo of Japan acquired Ranbaxy India, brownfield. Pepsi India, Hyundai India, greenfield, and Hero Honda your joint venture. Okay. Now let's move on to the next question, which says that the Indian firm that receives FDI through automatic route must follow which among the following? So 3 statements are given, and your knowledge about the different type of routes involved in FDI is being judged by this particular question. The first statement says, report to the Foreign Exchange Department and regional office concerned of the RBI. This is a correct statement that whenever FDI is happening through automatic route, the concerned party must report to the Foreign Exchange Department and the regional office of the RBI. Supposedly in Gujarat, some companies trying to invest. So in Gujarat, the regional office for RBI is in Ahmedabad. So here in this particular office, the information will be given by the parties involved that we are planning to have this FDI, foreign direct investment, and we need certain, you can say, approval from the RBI, and not the approval per se, but just an information. They want to share the information with the RBI. Next statement says issuing shares to RBI. Yes, this also happens. But last one, take the permission of CCEA, Cabinet Committee on Economic Affairs. This does not happen in your automatic route. This is the characteristic of the government route. Fine. FDI through government route. So correct answer will be 1 and 2. That is option C. will be the right answer. Okay. Yes. So two-stage reporting process is there. First of all, the Foreign Exchange Department, Regional Office, RBI, within 30 days of the receipt of share application, the setup which is involved between the foreign company and the Indian company will be shared with the RBI. Second, upon the issue of the shares, the party is required to submit all the documentations which is being asked by the Foreign Exchange Department. Okay, so last question. It is about the scrips and MEIS. Under the foreign trade policy, the scrips issued under Merchandise India Scheme MEIS can be used for the payment of which of the following? 0.5 marker question again. Whether it is CGST or it is IGST, custom duty, or state goods and services tax, that is SGST. All these are wrong involving GST because we are talking about trade. Okay, we are talking about foreign trade, and in foreign trade GST makes no sense. We are looking for the customs duty, we are looking for the service tax. Okay, so custom duty for import of input goods will be the right answer here. Option C will be the right answer. Okay, so scripts, as you know, they are a setup made by the traders, you can say, right, since time immemorial, through various names. We know this particular setup, wherein it is a substitute to the currency setup and can only be redeemed at a certain company. In which form nowadays it is being utilized? In the form of rewards point, coupons, and gift cards. And the traders use these scripts generally for paying of their custom duties, excise duties, and the service tax. Okay, so this was it for this particular session of MCQs. I hope that you have learned something new through this session. A very short session, I would say, because the MCQs which we have covered are from the FTP chapter only, and that chapter has a limited scope of the questions. Okay, so if you are preparing for JAIIB May 2025, which you are, because that is why you have attended the session, one highly recommended course for all of you will be the selection batch. Now, why I'm saying this? Because this will be the last batch which we are launching, or we have already launched in this particular cycle of JAIIB May 2025. After this, only the crash courses will be launched first. Secondly, all your doubts, all your concepts, all your you can say practice requirements will be fulfilled once you enroll in this batch. It will provide you one-stop solution because it has 300 plus hours of online live classes along with the recorded classes. Then you have 150 plus test series and ebooks as well. It has already started from 8th of March, but you have not missed the train yet. You can still join the batch by going to our website. So do enroll in this particular batch, because ultimately you will be able to crack this exam if you have professional guidance on your side. Okay, so RAFTAAR series, which we are running on alternate days for 2 subjects each. Like for Monday, Wednesday, and Friday, you will have PPB and AFM. When we talk about Tuesday, Thursday, and Saturday, you will have IE IFS and RBWM. So these RAFTAAR series sessions you must attend, because ultimately practice is what will make your score grow, and you will be able to crack this exam very easily if you know what type of questions are being asked and how to answer those questions. Okay, so on that note, if you have any doubt, you can just ask me, and if you're watching this particular session in the recorded format, then you can directly tell me in the comment section what all doubts you have, and I will reply to all of you. Right, so okay, no doubts, fine. So we will meet in the next session. Till then, goodbye, take care, and do start revising and solving maximum MCQs you can.